Hey, welcome to the Airmere Trading Group 1 meeting. Today is the 8th of February, 2021. If you're new, welcome. The Trading Group 1 is a lot of experienced traders and some newbies too. So if you have any questions with options trading, futures, Forex, trades that are in trouble, questions, things you don't understand, this is the place. So welcome everyone, glad to have you here. I did have a couple of things I wanted to let people know about. Let me see if I can find my notes. I was writing up the meeting so I wouldn't forget what to say. Let's see. One of them is I wrote some code this weekend to post meeting notifications on Twitter. So I know a lot of people use Twitter. I hadn't really been using the Aramir Twitter feed a lot. So that's actually working pretty well now. I've been testing it this weekend and sending out some tweets. So let's see. There's the Twitter feed. If you guys haven't seen it, there's also a link at the bottom of the member site, and I think also on the public site. You'll see a little Twitter icon, but I'm publishing things there. And then for the sleep well, did some programming this weekend, and actually, I don't know if you saw it, Dwayne, but I came up with a chart that compares the spiders to the sleep well performance. Have you seen that?
Yeah, I saw it. I loved it. Yeah, I saw it. It was on
I
the
put it in
actual
Skype.
landing page for it, right?
Yeah, yep, exactly.
Yeah, I
So
thought that was great. I was like, wow, that's a really pretty. I know that you were talking about doing that for a little while, so I'm glad to see that you got it done.
yeah, that's updated a couple times a day. See if I can get the URL for that. Open image, a new tab. Here we go. And where's my meeting now? Trying to do everything on a single screen. Okay, there's the current. Well, actually, that's the URL that I post to. So that'll just update that number at the end. That just so it doesn't get cached in a browser. But that's the performance of the sleep well compared to the spiders since inception of 29 September last year. So I actually have it in the database, how much percentage wise it's up. It looks like the SPY is up maybe about almost 10%, and the sleep well's up like 30%. So it's kind of blowing it out of the water. Um, let's see, any other news? I think that's the big things I wanted to tell people about that I've been working on this weekend. I'm just getting Twitter up to date and this new chart. I really liked it. It looks pretty good. So especially when the performance is that good. Oh, you see is the logo. Oh, I guess I could share my screen. I guess that wouldn't hurt, right? Okay, now you should probably see it. You see that, Wayne?
Yep, yep, I see it right now.
Okay, great.
Are you going to convert the I know that that was basically taking what was on the like performance tabs and stuff like that. Are you going to be converting that onto the actual like members section?
Yeah, I probably will.
It's a good looking graph.
Let me see if I can pull up that page.
You said it
It's got,
auto updates too, right?
yeah, it goes like every hour. I think I've got it scheduled.
Yeah.
Now I guess I got to do this in a private window. So let's see the performance. Let's see products performance. Let's see how it looks here. This is probably the old one still. Oh, oh, I know. I clicked on the wrong one. This one. Yeah, that's the old format. But these are generated on that sales page as a graphic. So again, that gets updated a couple times a day, and it tells you the date timestamp at the bottom when it was updated. But you can see we're up 32.5% now. Pretty awesome numbers. The Kalmar ratio is ridiculous, 56.
Yeah, it's probably one of the best environments for this type of type strategy. You know, we're getting low to no inflation, falling bonds, growing growth, accelerating growth, and then a boatload of stimulus, right? So, it's a strategy that's going to capture on that macro environment, and the longer that that macro environment sticks around, the better we end up doing. So it's definitely a different strategy than what, especially options traders. I come from an options trading background too, and so it's definitely different than that kind of mean reversion, range bound type of strategy, which is why it's so good to be paired with option strategy, because it's so different. Um, so it kind of balances some things out, but it's been working out really, really well. So I'm glad that.
Diversification, yeah.
Yeah, yeah.
In fact, I was surprised, given that the Twitter account was basically unused for the last 3 years. When I made a post on the sleep well, there were like 62 people that saw it. So that kind of surprised me. So I guess there's a lot of people on Twitter looking for investing ideas, which is pretty cool because it's a nice way for the non-traders to go too. Um, so yeah, it's nice to have it in your quiver as a trader as well. Like you said, to not have your whole portfolio in the options stuff. Let's see. There was one other thing too. I'm on the other, my expert signal's on the other laptop, and it's running the live streaming meeting, so I can't really show it with two meetings at the same time. But that video that Daniel sent me another clarification, but it looks like it's pretty easy to follow. And there was a move that's actually going on right now. It's up about, I don't know, 50, 60 pips. That I was out running errands, but normally you don't trade on Mondays, but Daniel said you can after the London Open. So you could have taken that if you wanted to, but let's see if I can pull up Trading View. I think we're going to have decent results this month. Let me look, GBP, USD. There's got to be a chart here for it. I know I've got a login for it somewhere, but can I change the time frame here? Oh, it didn't log me in. Okay, here's a daily chart. I have intraday here. Oh well. Anyway, it's been making some pretty big moves on a daily chart. You can see. Oh no, this is a 1 day chart. So yeah, this is today. So here was the move that started when I was out running errands, and expert signal actually would have pretty easily captured that. And each one of these is 10 pips. So you probably get long around here, maybe here worst case, but there's 40, 50 pips, which is 4 or 5% return on an account. So it's kind of nice. But anyway, that's we should have pretty good results by the end of the month, I'm thinking. Now, let's see. I saw Tim Pierson finally made it. Good morning, Tim. Are you at the microphone? I don't hear Tim. Maybe he stepped away for a second.
There.
Oh, there you are. Hey, morning.
It wouldn't let me unmute for some reason for a minute, and then suddenly it did.
Oh, I guess I need to reset a security thing too here.
So, yeah, I missed a few. Sorry about that. Several things came up on a couple of different days and stuff, and anyway, that's what happened.
Yeah, we were missing you, Tim.
Yeah.
So nice to have you back.
Well, I intend to be here all the time. Right.
So how's your trading been going? You do, I think you said you were doing like more box cars now.
Well, I want to. I didn't get one last week because I didn't feel conditions were right, and I don't feel conditions are right today either. So I probably won't be opening one today. We'll see if we turn around. I'm going to try to open these a little more when we have more of a down day,
Yeah, we're not getting many of those these days, are we?
No, we're not. Gee. So waiting and watching, I guess, on a new boxcar, and then I'm still doing a few put credit spreads and a few call credit spreads and a bunch of covered calls, all that stuff still going on. So I don't know, what can I say? I guess I've been you know, a little bit lazy lately.
Well, nothing wrong with that as long as things are still working out. And with this market, I think your covered calls would be doing just fine.
I'm doing pretty well with those, and I'm still getting all the dividends and everything, so that's all cool. And yeah, doing okay otherwise.
How's the beginner trading group been going? What have you been talking about there?
Um, let me get my notes here. Let's see. One thing I talked about last week was thin put credit spreads, and thin meaning where the strikes are really close. Like, for example, I just did one on AT&T last week where the strikes are half a point apart. And so I explained how I do that and why. And I went over a boxcar that isn't my trade, but somebody else's trade that I'm watching or following with, and showed a good example of removing the debit spread when you should, you know. It was
Right.
enough to raise the upper line to above zero. So now that trade's probably going to expire this week and make its decent profit. It won't make a ton of profit, but it'll be decent.
Is there anything you could show us, like what you're talking about, or details?
I can show you the AT&T spread. Let's see. Oh, I don't even have Thinkorswim started yet. Let me get that going on this computer. Yeah, I'll show you the gist of what I talked about last week, if you can hang on a second.
Sure.
Yeah. I'm looking for doing some technical based long trades, and I'm stocking about 3 stocks on that, but I haven't actually got the signal yet that I'm looking for to make those. So I'll probably do a few long trades either with stock or calls going forward.
What kind of technical stuff are you looking for?
Yeah, I'm looking for Bollinger. I can show you that too, but I'm looking for Bollinger Bands, stochastics, and well, those are the 2 main ones, but then a little bit of MACD.
Oh yeah.
It's installing updates, so we're waiting for this.
Yeah, I had
So
to do that this morning.
you had to do what?
I had to do that this morning. When I'm doing the trading, I open up about 5 Trader Workstation instances and a Thinkorswim instance for some accounts I'm trading. And yeah, there's the update for TOS took a little while.
Oh, okay, right. There it goes. Okay, so now it's logging in. Sorry, make you wait.
No problem.
I don't know for sure what I'm going to talk about this week in the beginner group. I haven't quite figured out what I'll do yet this week, but okay, almost there. There it goes. All right, now I can share the screen. Let's see. Tell me if you see it. Yeah. Oh, I have GameStop up. I've been just for fun watching that whole thing.
Oh, wow. That's a mighty fall, isn't it?
Yeah. Well, it's there's no way you could say that you expected it to stay up there at 483.
No, no, definitely not.
Right. So let's go to AT&T and
Should have done a no-cost collar there, right?
yeah, it could have been.
Sell some out of the money calls and buy a put.
I don't know what the volume would have been on the options or the liquidity, but yeah, you could have. Okay, here's AT&T, 4 days to go, but let's go out another 2 weeks or something. Okay, so AT&T is at 28.83, And let's say we were going to sell this put spread 28.27, something like that.
So just 1 point,
Yeah, well,
or I
this
guess
is
1.5.
1.5. And it's quoting at 28 cents right now, which isn't bad actually. But the gist of my thing was this: if you look at it differently and look at it only half a point and did 3 times as many of them, because it's three, it's a point and a half here and it's a point, half a point here, so you can get 3 times as many for the same margin. You get 14 cents times 3, which is 30.
42.
42. So it's 28 versus 42. So it's 70 or 80% more than you would get with the same margin by doing a wider spread. And this often works on many stocks. It's something you look at, but why would I sell that point and a half wide one when I can sell half a point wide one and get a lot more credit? So that's the gist of what I was talking about. And this, in fact, that's what I did.
Do you think it could get filled at those prices?
Oh yeah. I actually filled this one that we're looking at, although it was 12 February, for something like 11 cents. So I did about 10 of them, and got my 110 bucks or whatever it was, when I might have only got 70 or something if I hadn't done the thin one.
Let's see, 11 cents would be 33 cents of the wider one. So you're still getting a little bit more.
Well, the numbers were a little bit different. I did this back on February 4th.
Oh, okay.
But these numbers today are examples of the kind of difference that I saw back then as well. I can't remember what it was. It was something like 21 cents versus 11 cents or something.
But a third the strikes with.
Yeah. So that's, if you're doing put credit spreads, this is something to think about. And even if you're using put credit spreads as an adjustment, like to many of our trades, we have put credit spreads as an adjustment to add premium. You should still think about this, even on SPX, because you can end up getting more credit for the same margin.
And there was a comment that you'll pay more commissions, of course.
There are more commissions. You do have to think about that. That's correct. But it should, in just almost all cases, far outstrip the rise in commissions. And conversely, if you were buying a debit spread, again, as an adjustment or even a hedge or its own trade or something like that, go the other way. Why would I buy 3 of these? Because it would cost me more than buying 1 of these, that's wider. So if you're buying them, go wider. And if I make this really wide, like 3.5 points, let's see, 3.5 and half would be 7. So that'd be 7-to-1 ratio. I'd get $108 here versus $35 here for the same.
That it would cost you.
Yeah.
Yeah.
Right. So it can be very significant.
I guess the thing, if you're hedging, the tighter spread would give you more protection sooner, though.
It would kick in sooner. Yep, that's true as well. And that's what you want if you're doing a hedge. So that's another reason for doing it. Let me go to a stock. Let's just pick a stock like UNH is one that I'm thinking about, or stocking, you might say, for some kind of a long trade. And here's my Bollinger Bands chart. If it ever comes up, it's going to switch the symbol on me. I hate that. I gotta, I change all these color chips to match and everything, but since I do the toss on several computers, it doesn't always remember and it doesn't always work right. So anyway, So here, let's expand this chart. When there's no event coming up, there's no earnings, they've already had earnings, and there's no dividend coming up in the short term, and it gets to the lower Bollinger Band, and the upper band is not curving up, you know, that's one alert signal that you might have a good long trade coming up here. Now I'm talking about stable stocks. I'm not talking about Teslas here, you know. Usually I scan for stocks that have at least a 2.5% dividend. But if the stochastics are below 20, which is generally considered to be the oversold range, and these two lines cross to the upside. So, for example, you can see right here, these two lines cross. The tan colored line cross the gray line to the upside right there. That was just after it touched the bottom Bollinger Band, and so that could have been the kind of signal that I'm looking for to go long, and in this case, it would have worked. I have MACD on the chart here. Again, in that case, MACD crossed from negative to positive right about there, maybe a day later. That's a confirmation signal. So those are the things I look at. And if you think about it, Bollinger Bands is a volatility technical. You know, this is a 2 standard deviation width on these bands. So that's volatility. Stochastics is basically recent price or momentum. And MACD is kind of momentum, maybe a little bit more momentum based than stochastics is, based if you think about their formula. So I've got 3 that are not exactly correlated, if you know what I mean, 3 indicators.
Yeah.
And anyway, that's my plan for going long on a stock, and even going short via puts or something. It usually works the other way around. But I really recommend using somewhat stable stocks for this, and not wild ones like GME. You know, those you might get all the signals, but I bet it wouldn't work as well.
Well, those are being manipulated, so it's hard to find patterns that are useful in those situations.
Right.
Have you ever looked at the Trade Machine Pro? I know they've got a lot of technical indicators that you can test with, and one of them I liked was buy the dip. I think it was
Oh,
something like where when the stock goes below its 200-day moving average, and then it comes back above it, and also goes above like the 10-day or 20-day moving average, and that was a long signal. It was something like that. But just on this chart, you can see a couple places where it did dip below the 200 and then pop back above. And if you went long, that's not a bad signal.
well, this purple line or blue line is my 200, and it touched it here. So I guess you could take that as kind of, and it bounced off it. So, you know, that's an example maybe.
Yeah, I'd have to go look up the exact rules, but it's a neat tool if anybody hasn't seen it. There is an Aramir discount, fortunately, because it's normally $200 a month, but it's down to 130 with the discount. But it's interesting. They keep adding more technical analysis stuff to it. I'll
Yeah.
have to I'll have to do a demo of it, I think, but I haven't used it for a while. But I got locked in at an old rate a long time ago, so I never cancel it because I never want to. You know, I have a subscription to one tool for the web that was like, I don't know, $200 for the year, and now it's like, $50 a month, and I never want to cancel it because I don't use it that often, but I like the tool.
Yeah. I have not used that one, so I'm not familiar with it. So
Well,
here,
maybe I'll do a demo of it next week. I like it. It's pretty interesting. You can find some cool trades with it.
yeah, here's Walgreens, and it was below the 200 until, well, briefly here, but here's where it really crossed. And, you know, we got a stochastic signal there, we got an MACD signal there, and we almost got a Bollinger Band signal. So somewhere in here could have been a good place to go along. And if you did the buy the dip, as you just explained it, you know, it was below it, now it's above it, and it was above the 50. That's my purple line. Anyway, you know, similar method.
Yeah, I'm just looking it up here. I'm looking for their rules. Let's see. Oh, I think here it is. Trigger. Yeah, it's something about where it goes below the 200 and then comes back above it. I'm gonna have to go. They have a bunch of documentation. I'll have to go look it up.
Yeah, and oh, I forgot to mention, even in my simple method, I tend to not go against the where it is in the 200. So in this whole range here is below the 200. I would do bearish trades, but not bullish trades. And if it's above the 200, I would do bullish, but not bearish. Yeah.
There's another one. A friend of mine from New Zealand had a friend who made a fortune, and all he did was when a stock was making a new 52-week high, he would go long.
Yeah, I've heard of that. That probably worked just as well as anything else.
Yeah.
Yeah.
Keep it simple, right?
So last week in my beginner training group, the day before, I actually went flying with a friend in his Class Air, which is a hot rod, small home built airplane.
Oh yeah, that does look like a speedster.
And I put it on the opening. So there's a picture of the plane and a video of our landing. If anybody's interested in that kind of stuff, you can see it in the recording.
How fast did it go?
It'll cruise at 150 miles an hour on 50% power, less than 5 gallons an hour. So that's amazing. And normal power, it's about 180 miles an hour.
Is that knots or miles an hour?
That's miles an hour.
Okay.
And we got VFR on top of the clouds, which was really cool. And came down.
Visual flight rules for those who don't know.
Yeah. Oh, yeah. There's rules about that. It just means we're visual, but the clouds were solid underneath of us. So it's all legal. It's all one of the rules. And then we found a opening in the clouds and came down through that and got to where we were going. It was really cool.
Nice.
Yeah. So anyway, all that's what's going on with me. I don't know what else I'm doing. See, I see a comment from Lloyd. So you need a spread dashboard to see that quickly in trading.
I think he's talking about your thin spreads.
I'm not sure. Wade, what I do is exactly what I just showed. You know, when I'm thinking about doing a spread, I'll find the short that I want to sell, and then I'll start playing with the width to find out what the relative prices are and figure out which way to do it. That's what I do every time. I don't actually have a scan or a dashboard that compares those. Although you could write one, it wouldn't be a big deal.
Yeah, that shouldn't be hard to do.
Yeah.
I was playing around with Excel too, because like the sleep-all portfolio, people like having a spreadsheet. And there's actually a way with Excel that you can pull in delayed stock data from Morningstar. You don't need any like TOS connection or anything. It's just built right into Excel. It's pretty cool. Have you seen that?
No.
Let me see if I can find the link.
So just to sum this one up, here's Bristol Myers is one of the ones that I'm watching for doing a long trade on. And we don't have the stochastics going up yet. We're getting close to the bottom band, and the MACD is low, and it may start rising. If those things happen, those three things, or at least two of them, I'll probably be going long on Bristol.
Let's see if I can find that. So when you go long, you this with options or covered call, or how are you going to go long?
Any of a number of ways. A stock like this, I might just buy it because it's 60. You know, a stock like I don't know, UNH, what was that? $200, $300 a share. I'd probably do options on that because it'd be cheaper. Yeah, I'd buy a 70 or 80 delta call that's a month out or something, and consider put credit spreads. But BMY is one of the ones I actually like, and so you know I don't have any problem owning that one. And their dividend, and they got a good 7.2% dividend yield. So if I ended up owning a stock for any length of time, I'd just collect the dividends, you know.
Right.
So Yeah, that's a good one. I'm watching. That was AT&T. I'm sorry, it switched on me again. Thought that was a little high. Yeah, 3.2% for Bristol Myers. Still, that's not bad for dividends. And they got one coming up at the end of March, so could be a good deal.
Okay, I think I remember how to do this. Let me see if I can figure it out. Oh, I got to sign into my account. Let's see. Are you signed into an Excel account, Tim?
Excel account?
Yeah, like a Microsoft account with Excel?
Yeah.
Oh, maybe can you pull up Excel real quick then?
Yeah.
Maybe we can do this together.
Just a
So just
blank.
do a new sheet and put in a symbol like a spider, like SPY. And then I think you have to have your cursor on that cell. And then you go to data. So you got to go to A1.
Right.
And
Data.
then
Oh, up
go
here.
to
Yeah.
data, and then there should, yeah, stocks that
Stock.
in the data types.
Where's the data
It's
type?
kind of in the
Oh, data
middle.
types right here. Got it.
Yeah, stocks.
Okay. Yeah.
Then it should pop up a thing. Let's see.
Over here. Yeah.
Yeah, data selector. So there you go. Select that. And then I guess you got to select it somewhere at the bottom.
Oh, this is pretty cool. Okay. Let's see. How about what do we want? We want the price.
Yeah, probably the last price.
It says delayed 15 minutes, but okay. Select that.
And now I think, oh, it puts it to the right. So make that A column wider. And now hit on home, hit, oh no, there it is. And refresh all on the data, that button. I think it's also Control Alt and one of the function keys. I forget which one.
Okay.
Yeah, there's a refresh all to the left, right underneath formulas. To the right,
I'm a little slow today. Sorry.
little
Oh,
right,
yeah.
right there. Yeah, refresh. Now, where did it put it? When I did this, it put it on the right. So try this. Try and on cell B1. Try going or yeah, anywhere there. Go cell A1 dot price and see what that does. Maybe you might need an equals.
Yeah. A1 dot price. Okay.
Yeah.
Oh, cool.
And now hit refresh and it should refresh the price. It probably hasn't changed since you just refreshed it, but yeah, so that's pulling in delayed data for free from Morningstar.
Oh, cool. And so it's whatever this is, some object that has properties to it.
Yeah, you put in a symbol and then it looks it up and then it knows what exchange and everything it needs to look for to get the data.
Cool. So
But you can build your own spreadsheet to pull in stock data without using any broker or anything.
we could do all these things. Look at this. All these things are available.
Right. A lot of information, really.
Market cap. How about that? There you go. Oh, that's pretty
Boom.
cool. That's don't need TOS, don't need RTD to do that.
Nope. Lean and mean.
Now, if I just sit here, will this update or do you have to hit refresh?
You have to have refreshed unless you write like a macro, I guess. Yeah, see there it is. There's a new price.
Cool.
And if you hold your mouse over refresh, I think there's a keyboard shortcut like Control Alt. Yeah, there it is. Control Alt F11.
F5.
F5. Yeah, there we go.
Yeah.
So
well, that's pretty cool.
That's all there is to it.
I like that it has lots of information available,
Yeah, so if you want to put together a dashboard that has, like market cap or PE ratios or whatever that kind of stuff, it'll all pull it in for you, no problem.
That's really cool.
Yeah, I liked it. It was something worth sharing, I thought.
Yeah, it is. You could definitely build some interesting spreadsheets out of that.
Yeah, and if you're not a trader, if you're just doing like cover calls or just a stock portfolio, this would be perfect.
Yeah,
If it's delayed data, so it's, obviously you need to check your broker for live prices, but for most of the stuff, it doesn't matter. Like market cap, that's it's not going to change much for every 15 minutes.
cool. I'll have to play with it some more.
Oh, sounds like my phone's ringing. Oh, well,
You know,
I'm in a meeting, so
expense ratio, price, volume. I don't know what some of that is. Learn more on link. Okay. It's available, whatever it is.
it probably puts a URL in that you can click on to get more data, I'm guessing.
Uh, I
Oh,
learn
it's
more
not
on
a.
thing. It must be somehow, yeah.
It looks like it's supposed to be a link, but
I don't know. Maybe I don't have something set right. Yeah. Okay.
anyway, it's a neat little tool.
Yeah.
All kinds of stuff built into Excel you don't know about.
Right. Right.
And I suppose you could do some kind of macro to refresh it every minute or something if you wanted to, but the
Yeah, I've done
refresh
that kind
all.
of thing in my dashboard, and yeah, you can write a little small piece of code that'll do it every so often, every 20 seconds or whatever you want to do.
On Wayne asked, what site is Dan Harvey using for stock values? I think Dan uses a couple of different sites. I know he uses Power Options. I don't know what else he's using for stocks. Do you know, Tim? I can't remember.
I don't know. I would have said power options as well, but other than that, I don't know. He's obviously using TOS,
Yeah, I know.
and he's had some spreadsheets that use TOS data, so maybe that's what he's doing.
Well, I know there are some sites he uses, but he has used Power Options before, but there was another one he was using. Let me go back and look. Let's see here. I gotta put the records up kind of high. Okay, let's see, Dan Harvey.
It's Stock Rover.
Okay, Stock Rover, that sounds right.
Oh, I see. Mark said FinViz. Yeah, FinViz is really good, and they have an excellent screener and evaluator, especially if you want some fundamental data. I've used that one. I think Dan showed FinViz once as well.
Yeah, in fact, the data on the members homepage, all those boxes with what's going on, those are actually coming from FinViz.
Okay.
Oh, the futures data. I really like their futures page because it gives you a snapshot of what's going on in the world markets on one page, without having to load any charts or anything.
Right. FinViz.
And then go to the futures page, and it's a one-stop shopping
Yeah.
snapshot of what's going on. You want to see the U.S. equity markets, bonds, gold, Europe, metals, interest rates, currencies. It's all on one page.
It's a heat map then, isn't it?
Pretty much, yeah.
Yeah. You hover over it and you get a little chart. Yeah.
I love that page. Now it's interesting. The equities are up and VIX is also up. Wonder what that means.
Get rid of this. Okay. Yeah, that's well, that's a red flag.
No, it's a green flag.
It's a green flag, except it's a red flag.
Yeah.
Usually we're going down shortly after that happens. But yeah.
What does VIX Central say? How's their term structure looking?
Look for a while.
Okay, we're in contango, which is good.
Yep.
It was backwardation a while ago.
Yep.
But 10% contango is pretty solid.
Yeah.
So no warning flags there, at least.
You know, Gary did some code that calculates that, which is what you see down here. Here, I'll make it bigger.
Oh, the contango difference?
Yeah, it's saying right now about 10.2%. I mean, it's pretty close to what VIX Central shows. But
Yep.
yeah, we're in backwardation just
Not
7
that
days
long ago.
6 days ago, according to this, right?
Now it's interesting on that chart. You see where your mouse was, all those days and we're kind of backwardation on the left side of the chart.
Yeah,
The market was going down, but it didn't really crash. It was just a slight pullback.
yeah, right. It was just this right here.
Now, normally when you start seeing backwardation, that's kind of the spidey sense starts kicking in. You go, well, maybe I need some downside protection, but it didn't really materialize.
Yeah, but absolutely, this is a really good one to watch. And you know, my plan is to hedge when it gets into backwardation. You know.
Hey guys, I wonder if that was just because that was right before the election.
Yeah, when was that? Yeah, it looks like it was. You're right.
Here's the election, so yeah, it was.
Good call. Hey, Dave.
Hey, good morning, guys.
Oh, and I guess Thomas says koifin.com is real time and news all for free. I've never heard of that one. KOYFIN. Take a look at that. Investment analytics platform.
I know.
Koifin is currently free. Okay. I'll have to add that to the meeting links.
Yeah, it looks like it could be good. I mean, I don't have an account there. I can't even do the free stuff, but looks good. Look at that. Yeah. Great. I have not heard of that one before. So that's good. Thanks.
Yeah, that's a good one. So Dave, how's your flex trades going?
You disappeared.
He disappeared, yeah.
No, I'm still here, just trying to find my unmute button.
Oh, there you go. You found it.
Yeah, I'm frantically trying to go from screen to screen. Where are you? Where are you? Well, I guess our report card so far is we've had 8 out of 10. We've had 10 trades so far, doing the kind of the new kind of weekly type flex trade. And last week, unfortunately, was a loser. So we had it was about 2.8% or about $300 approximately. We were trying to make about 1,000, but we lost about 300 or so. I was, you know, when I was looking at the trade on last week, it was what Tim was just showing on his screen. There was, backwardation. That actually we were in backwardation back last week, and pretty significantly. But as soon as we put the trade on, if you look to all the indicators that I was looking at, everything was saying, hey, get into a bit of a defensive posture and protect mode. So I had made changes to the trade based upon that. And of course, the market did exactly the opposite. I mean, it was just bullish beyond belief last week, every single day. So, when we put the trade on, we said, well, the worst case here is, actually, we didn't even put the trade on Monday. We put it on Tuesday. I said, well, I was still fearful of it. And I said, well, worst case here, our worst case to the upside is we'd be down about $300 if it expires there. But we're fully protected to the downside for any kind of a 50, 70, whatever kind of a move. We were fully protected. And of course, because we put all the protections in place, the market just said, laughed and said, no, we're going the other way completely. I mean, every day was unbelievably bullish every single day. And basically, we had nothing that we could do to make sense, or it was too much of a risk to take on any kind of a, kind of a modification. I know some people did. And actually, if they're timing during the day when we might have had a day that we had a little bit of a dip, but they were able to go and make their adjustments and able to, I know some people that made out, they actually were positive last week, but it was just a matter of a timing thing. And I was just being very conservative, and I knew what my worst case was, and that's what we had. So, but it was a big, like I said, so we're eight for 10. Still up about 12% over those 10 trades, of which 8 were winners, 2 were losers. So that's kind of where we are right now.
Well, cool. And I guess now these are every week, so that one's all over with, and you're
Yeah,
looking for a new one this week.
Yeah, we'll be putting out a new trade on later on, towards the end of the trading day today. Once we see, I mean, the RUT again. I mean, look at the RUT again today. My gosh, up over 40 points at its high.
Do you ever trade anything else besides RUT, or is it only RUT?
RUT and SPX. Lately, it's been only the RUT because that's what actually we did all of our back testing on. But we did some back testing also for SPX, and that was doing better. And as a matter of fact, I was probably going to be taking a look at that because as the SPX has been quite a bit tamer than the RUT lately. But I think for right now, I made modifications to the trade as far as just if you take a look at last Tuesday or last Monday and Tuesday, the prior week RVX had gone up about 20% beyond what the RVX was during the time period from about December 1st through the end of January. So we were trading at a significantly higher volatility level. I mean, to the tune of 20% more. So it has now since retreated back down. I think it's just under 30 right now today. And we have dipped back from, or I should say we were in backwardation. Now we've come back up through and come back to contango again. So, the market made a complete reversal last week. But again, we're at, as I think Tim was showing on his chart there, we're at, all-time highs. But, Janet Yellen says that, she's confident about things happening. And, so there's a lot of positive political news happening for sure, stimulus package coming out and all that stuff. So, to the degree that it changes the, what's happening, it seems like that the RUT has been much more sensitive to that, even though even though GameStop has been calmed down. I mean, I do believe that, a week or two ago, that was significantly affecting some of the day-to-day trading on the RUT. Just the pure volume on GameStop was, you could actually see a few days where, as a matter of fact, I noted to the trade alert service, I said, hey guys, there's something really strange happening here. And I said, I don't get it. I don't know what it is, but I said, I'm going to pause here because I don't get it. And then soon thereafter, information came out to find out that, GameStop is part of the Russell 2000. And the volume was just so significant that it actually affected the whole index. So that was.
So GameStop's on the Russell index?
It is.
Okay.
And if you took a look at the report that I saw, much after the fact of when we had put our positions on, was that if you looked at the pure volume of GameStop versus, the other 2,000 stocks, or I guess 1999, you could see the GameStop minute by minute chart and the RUT, and they were paralleling each other for a while. And it was exactly at the time when I was looking at it saying, I don't understand, like you and Tim were just talking about, gee, the market's going up, but all the volatility, the VIX and the RVX are all going up, and I think Tim said, yeah, that's usually a sign for,
Red
things
flag. Yeah.
red flag things, yeah, red, green, but it looks like things might, be a little bit of a warning, time for pause, all those kinds of words. But so, but it's, sometimes you put all the information that you got and you put it all into, and, the thing I was trying to stress to my group last week was I said, look, the goodness is that, on a week-to-week basis, we can actually change our philosophy based upon being nimble with whatever the market is doing. So even though last week, we completely went defensive, and we started our positions much farther away from the money, and we did certain things to be able to prevent, took on a little more negative delta in case the market goes down and all these things. And of course, it completely, the market just threw it in our face. But going into it, we knew what the worst case was to the upside, and the worst case was, okay, we may not be able to trade out of it. We may have to just let it expire, which is exactly what happened. But because to take on any kind of an adjustment afterwards, as you know from other trade designs, once it goes past a certain point, you take on way too much risk for any kind of little reward you may be getting. So the good news is that, okay, that was in place then, but here we are now on Monday, and it's kind of nice that you can kind of just like Tim was hitting the refresh button on Excel. We're hitting the refresh button on the trade, in the sense that, we can see what's happening with the market and react to it, and change, appropriately. So that's what we'll be doing today.
Yeah, I saw you were down less than 2%, so it should be easy to recover that.
Yeah, it's like I said, we're trying to make, on the typical trade, we're trying to make about $1,000 on a trade, and like last week we were down about a little bit over 300. So it was well within. We don't want to try to go over 1,000 unless it's maybe due to some volatility hit, but not too much
some
over.
big market event.
Yeah, and usually I try to say, hey, if I'm down 1,500 on that size of a trade due to volatility, then that's acceptable in the sense of react, in other words, because it was due to, a very, very sharp move in the market. So, but like I said, last week we learned a lot of things. We put trades in place. As a matter of fact, the session that we had last Tuesday went well over an hour, trying to address a lot of people had questions, which were really good. And we addressed a lot of different issues. And so it was I think a good, education session.
Oh, excellent.
Yeah.
Sounds like things are moving along with the flex.
Yeah, it's nice. I mean, just in total numbers, if obviously everybody, every individual person's, return rate and stuff like that is always going to be different because of the time you get in and when you get the trades on and all that kind of stuff, and fills that you get or whatever. But because I know people that have done, the same as me, better and worse. So, it's hopefully I'm somewhere in the middle. And like I said, we're, right now, over those 10 trades, we're doing this style of, every week. Like I said, we're up basically about 12% over just those 2 months, or I guess that's approximately, 10 trades, so 10 weeks. So.
Do you see the flex and Dreamlifter merging at all, or are they going to stay separate?
To be determined. Right now, some of the characteristics of the Dreamlifter we actually brought into play with the Flex. So, it's not like we're mutually, exclusive of keeping everything, separate. So some of the learning that I had learned from the Dreamlifter, we incorporated as far as some of the technicals and some of that stuff. But I think that we'll just have to see kind of how this goes, because, we just don't know, right now, given the volatility in the market and where it is, I'm seeing just tremendous opportunity to be able to, make some good profits during this higher volatility stage, and keeping pretty nimble about doing it every week. But we all know that will change. And, when all of a sudden we start to get down to, RVX numbers that are, more like, instead of more like, 30 or 35, and we're down to more like, 20 or something, then, it could very well be that at that point, the flex trade will change. And also it may be more in line with time to be able to bring the Dreamlifter back into play. But right now, considering the opportunity, I see the opportunity way skewed towards the flex right now, as far as putting the capital into play, because we're putting a little more, we're kind of stealing a little bit from the capital of both trades, where normally we had about 20K in each trade.
Right.
So this one we're using probably like close to about a maximum of about 29,000. If we utilize all the, if the market does a particular thing where we have to go and utilize all the adjustments, we could use up to about 29,000. So I wanted to make sure that we had that capital available. So we could be trading the Dreamlifter smaller, of course, but at this point it was just easier to say let's just stick with this one right now. So time will tell.
Oh, just curious.
Yeah. No, it's a moving event.
Right, moving target.
Yeah.
Okay, and there is one thing I forgot to talk about that I had done. Now, as you may or may not know, Ali Pashai has been running the Simple Adaptive Trades. It's a trade alert / group mentoring thing for a while, but he finally broke out his own website and stopped the Simple Adaptive Trades with Aramir. So he had a bunch of students that were asking if they were going to continue with access to that or not. So I actually coded that today. So if you had access to the Simple Adaptive Trades at the end there, when you go to the My Stuff menu, you'll see Simple Adaptive Trades Archive. And if you click on it, it'll be in red to kind of make sure you remember this isn't a live class, it's an archive. And a lot of these tabs are like the ask a question or your settings or whatever, those have been removed because they don't apply. But if you had access to library files or messages, whatever, you can go back here and access those. So that information is still available to you. I don't have any plans to remove it long term. It'll probably be here for years, so you don't have to go rush out and download everything. Leave it on my server so you don't clutter up your hard drive. But it's here if you were subscribed to that and you were wondering what's going to happen to it. It's actually archived for you. So, and that's all taken care of. So that's I wanted to just mention that before we wrap it up. So it looks like we're pushing an hour here, so time to close the meeting. So thanks everyone for participating. Lots of good information. I was happy to share that Excel spreadsheet thing. That was a nice little tip. I actually made a Sleepwell version that uses that instead of the TOS RTD. So I gave it to Wayne. We'll see if we use it or not. But yeah, thanks again for a great meeting, everyone. And we will see you all soon. And Dave, I would like to talk to you about maybe doing a roundtable to kind of update everyone on what you're doing.
Yeah, sounds good, Tom.
All right. So with that, I wish everybody a good day, and we will catch you next time.